Picture this. A secluded island off the coast of Georgia. It's November 1910. A group of powerful men meet under a veil of secrecy. This is no ordinary gathering. The fate of the American economy hangs in the balance. This is the story of the Jekyll Island meeting, the clandestine birthplace of the Federal Reserve. Jekyll Island was a haven for the ultra-wealthy. Magnificent mansions and manicured lawns spoke of opulence and exclusivity. It was here, amidst this gilded backdrop, that a plan was hatched. A plan that would reshape the financial landscape of America. The secrecy was paramount. The attendees, some of the most influential figures in finance, traveled under assumed names. They arrived by private train, their identities shrouded in mystery. Even the servants were kept in the dark. Why all the secrecy? The answer lies in the true purpose of the meeting. This wasn't just about stabilizing the American economy. It was about consolidating power. A small group of bankers sought to create a system that would give them unprecedented control over the nation's money supply. Who were these men who met in the shadows on Jekyll Island? They were titans of finance, captains of industry, and architects of American capitalism. Their names were synonymous with power and influence. At the helm was Senator Nelson Aldrich, a powerful figure in the Republican Party. He was related by marriage to the Rockefellers, cementing his ties to the highest echelons of wealth and power. Joining him was Abraham Piatt Andrew, Assistant Secretary of the Treasury. Andrew was a close confidant of President Taft and a key player in shaping government financial policy. Then there was Paul Warburg, a partner in the prominent banking firm Kuhn, Loeb and Company. He brought with him a deep understanding of European central banking systems. These men, along with a handful of other influential figures, represented a concentration of financial might rarely seen in American history. They came from a world of privilege and power, their fortunes built on Wall Street and their influence extending to the halls of Congress. Their motivations, however, were complex. While they shared a desire for a more stable financial system, they also saw an opportunity to enhance their own power and influence. The Federal Reserve, they believed, would be the key. Unveiling the true agenda. The official narrative behind the creation of the Federal Reserve is one of economic stability. Proponents argue that the central bank was created to prevent financial panics and ensure a more stable currency. Indeed, the American economy in the early 20th century was prone to booms and busts. Panics and bank runs were all too common. The need for a more stable financial system was evident. However, critics like G. Edward Griffin, author of The Creature from Jekyll Island, offer a different perspective. Griffin argues that the Federal Reserve was not created to protect the public, but to benefit a select few. He points to the secretive nature of the Jekyll Island meeting as evidence of a conspiracy. Why the need for such secrecy if the intentions were purely altruistic? Griffin argues that the Federal Reserve, far from being a neutral arbiter of monetary policy, is in fact a banking cartel designed to enrich its members at the expense of the public. He points to the fact that the Federal Reserve is not a government agency, but a private corporation owned by its member banks. These banks, Griffin argues, exert undue influence over the Fed's policies, using their power to benefit themselves. To understand Griffin's argument, we need to delve into the mechanics of the Federal Reserve. How does this institution, shrouded in secrecy and controversy, actually operate? At its core, the Federal Reserve has the power to create money, not by printing bills, but by creating credit. This is done through a process called fractional reserve banking. Here's how it works. When you deposit money in a bank, the bank is required to keep a fraction of that deposit in reserve. The rest, they can lend out. This creates new money in the economy. The Federal Reserve controls this process by setting reserve requirements for banks and by lending money to banks at a rate known as the discount rate. By manipulating these levers, the Fed can influence the amount of money in circulation. This gives them enormous power over the economy. Critics argue that this power is often used to the detriment of ordinary Americans. They point to the Fed's role in inflating asset bubbles, devaluing the currency, and exacerbating income inequality. The impact of the Federal Reserve on the lives of ordinary Americans is profound and far-reaching. From the price of groceries to the value of our savings, the Fed's policies touch every aspect of our financial well-being. One of the most significant impacts of the Fed is on inflation. When the Fed creates too much money, it can lead to a general rise in prices. This erodes the purchasing power of our wages and savings, making it harder to make ends meet. The Fed also plays a role in exacerbating income inequality. When the Fed lowers interest rates, it tends to benefit those who hold assets like stocks and real estate. These assets tend to be concentrated in the hands of the wealthy, further widening the gap between the rich and the poor. Furthermore, critics argue that the Fed's policies have led to a boom and bust economic cycle. By keeping interest rates artificially low, the Fed encourages excessive borrowing and risk-taking, leading to unsustainable bubbles. When these bubbles burst, it is often ordinary Americans who bear the brunt of the economic fallout. The Fed's actions, whether intentional or not, have real consequences for the lives of everyday Americans. Understanding the Fed's role in our economy is essential for anyone who wants to make sense of our current economic predicament. The idea of a banking cartel may seem far-fetched, but history is replete with examples of industries consolidating power and manipulating markets for their own benefit. Take, for example, the Dutch East India Company, chartered in 1602. This powerful trading company was granted a monopoly over the spice trade with Asia. It used its power to control prices, crush competition, and amass enormous profits. Or consider Standard Oil, the oil behemoth founded by John D. Rockefeller in the late 19th century. Through ruthless business practices and predatory pricing, Standard Oil gained control of nearly all oil production, refining, and transportation in the United States. These examples, though separated by centuries and industries, illustrate a common theme. When a small group of powerful entities gain control over an essential commodity or service, they have the ability to exploit that power for their own gain, often at the expense of the public good. The Federal Reserve, with its vast power over the money supply, is not immune to this dynamic. Whether one believes the Fed is a benevolent institution or a tool for elite enrichment, it is crucial to understand the potential for abuse inherent in its structure and function. The story of the Federal Reserve is a story of power, secrecy, and the often hidden forces that shape our economic lives. It is a story that demands our attention, our scrutiny, and our active engagement. Whether you subscribe to the official narrative of stability or Griffin's theory of a banking cartel, one thing is clear: the Federal Reserve wields enormous power. Its decisions have a profound impact on the lives of every American. It is our responsibility as citizens to understand how this powerful institution operates, to question its policies, and to hold its leaders accountable. We cannot afford to be passive observers in a system that so directly affects our well-being. Educate yourself, read books, articles, and blogs from a variety of perspectives. Engage in respectful dialogue with others. The more we understand about the Federal Reserve, the better equipped we will be to advocate for policies that promote a more just and equitable financial system. The future of our economy, and indeed our democracy, depends on an informed and engaged citizenry. The power to shape that future begins with knowledge.